Hi, I'm Andrew Overman at Location, and as ever, I'm joined by Michael Webb over at Mortgage Republic, and each week we answer your viewers' questions about the mortgage-related world. And this week's question, Michael, is getting a mortgage in principle. What is it, and how does it work?
Yeah, that's a great question. So let's start with the acronyms that you'll hear. So they all mean the same thing. In principle will be the IP, but you might hear DIP, a DIP, decision in principle, a MIP, a mortgage in principle, or an AIP, an agreement in principle. They're all exactly the same thing, and they're kind of interchangeable depending on who you talk to. They will use one or other, and different lenders will call them different things as well. You might even hear it called a mortgage promise or something like that. You also hear people ask about getting a mortgage certificate because a lot of the lenders rather ceremoniously will give out certificates that you can print off as PDFs if they've passed you on an agreement in principle. Contrast to that,
what do you need to do to get one of these agreement in principles?
So basically, you'll need to have gone. If we talk about working with a broker, because you can do them by yourself, of course, but then the accuracy of what you've entered, I would personally call into question based on the hundreds of thousands of fact finds I've seen over the years, and many in the last couple of years filled in by clients themselves that then I've had to go through and kind of make accurate, particularly around income. So the the process would be is to sit down with a broker and establish what's important to you, what you're looking for in a mortgage, what you're hoping to buy for, what deposit you've got available, and overall an affordability using your documents, so your proof of your income, established and proved and calculated by a broker who knows how to calculate your income and what will be used, what will need to be entered into these affordability calculators around pensions, around student loan payments, around anything that might be discretionary paid off of your pay slip. Very important if you're self-employed that you have these documents and you sit down, because so many times we hear people talk about their turnover and that's not the number that's used. Again, very, very important if you're a contractor or you're a limited company owner, that you sit down and you run through the actual documents with a broker, not just your, well, it's kind of about this, because that completely voids the process. So the broker should verify the income for sure with documents, verify the outgoings with bank statements. Okay. And then what they would do is they would establish which lender is best for you, probably also looking at your credit files, which can be obtained for free in numerous places. And they would then check your credit file to make sure there's no anomalies, nothing on there that they need to consider when placing your mortgage. If there is, making sure they're going to lenders that would consider your situation. They would then take your information and go to the best lender for you and enter your information into their decision in principle system. That will take, depending on the lender anywhere and depending on the amount of information, anywhere from 20 minutes to half an hour for them to do. And then they will get a result basically. And a lot of lenders give an instant result, i.e. it's a computer says yes or no situation. These are what I would call the high volume lenders. So the likes of Halifax doing millions and millions of mortgage applications a year. They can't look at everyone individually. The computer will filter out which ones they want to do that with. And there's no appeal. They say no. That's it. Computer said no. Move on. Other lenders, for example, much smaller, typically localized building societies, things like that, more niche lenders may well ping that agreement in principle for a human underwriter to look at. Believe it or not, that situation, it gives you a much better agreement in principle because a human's already looked at the data and gone, yes, we're happy with it. A lot of the time when a computer's looked at the data, you can have the situation that when you go to full application, it gets declined when a human looks at it. So they'll do the credit search, credit check. Some lenders will credit score, some will credit search. There is a distinct difference. So a credit search is they will look at your credit file and say, does it match the profile we're looking for? Credit scoring isn't what Experian says your score is. It is what that individual lender is internally scoring your application at. And it is, again, an electronic yes or no. So if internally you need a score of 800 to get a pass and your score comes in at 799, you will get a fail. Okay, so it's that there has to be a barrier, and it is, I mean, I've just used random numbers, but it's that cut and dry. Once you've got that agreement in principle, it is typically valid for anywhere between 7 days and 30 days maximum. Reason being is things change and they will want you to do it. Now, believe it or not, lenders actually assess brokers on the conversion of agreements in principle to mortgage application, and then those onto mortgage offer and completion. That is a KPI that lenders will assess brokers on, and at a macro level, then decide what quality business they're passing, and therefore what will that broker get paid. Now, the reality is, in our world, we would not do an agreement in principle until you at least have a price agreed on a property. The reason being is, as I've said, that AIP could only be valid for 7, 10, 14, 30 days. And you've experienced it, Andrew. I offer on your property, so are 7 other people. I don't get it. I offer on the next one. I don't get it. And if each time the market's as fluid as it is, that first one I needed to do it with Halifax because they were best. Next, I needed to do it with NatWest because they were best. Oh, now it's Santander. Everyone.
What's the danger there then, Michael? What's the danger in having?
The danger of multiple credit searches, irrelevant of this soft search thing that lenders say, oh, we're just doing a soft search. Mm-hmm. Is it still multiple credit searches? They still appear, and lenders at some point will question, well, why have you had lots of them before you got to us? They can't see whether they passed or declined. So they might well assume, well, Halifax have declined, Santander have declined, NatWest have declined, and you've ended up at us. What aren't we seeing?
Excellent advice, as always.
So yeah, don't have lots done. And whilst I'm sorry to say this, it's likely to be in conflict with what a lot of estate agents ask for, until a price is agreed, we would not do an agreement in principle.
No, and I think it's important.
I will just caveat that, Andrew, with unless you have adverse credit on your credit file, in which case you need to do an agreement in principle before you even bother viewing a property.
Excellent. And yes, from an estate agency's perspective, I would add there that because of the frenetic pace of the market at the moment, we have experienced a huge volume of mortgage brokers that are reticent to keep applying for agreements in principle or AIPs, DIPs, for the reasons that you've mentioned. And now what we're asking for is for a competent and qualified financial advisor to confirm in writing that they have thoroughly assessed the affordability and criteria. And that's not just over the telephone with somebody saying, I earn X and this is my outgoings. It's having fully researched their identification documents, their financial commitments, any loans or credit agreements, credit cards, store cards they have, hire purchase agreements, and then being able to deliver comprehensively the likelihood is that they are able to secure a mortgage. So again, Michael, great advice. If you've got any mortgage related questions, do reach out to us on the channels in the post below, and we will happily answer your questions. Thanks for joining me, Michael.
Thanks, Andrew.